right, searching for the mute button there.
It's all good.
Okay, I don't have a presentation this week because I've not had time to put anything together. So I'm just going to go from my notes. First, let me share a screen.
Yeah, I think that's good too, to just like hear your thought process, right? Like it doesn't need presentations don't necessarily have to be like formal slide decks or anything like that. Like I consider all this stuff presentation, but yeah, like well, what you have there, that looks good. Are you able to zoom in a little bit? It's hard to read the text.
Zoom in. Yeah, well, there's a wrong chart anyway. That was this one. IW. Let me go to right. Dig out my. I use handwritten notes when I'm managing trades like this. So if I go to take you through gas. Okay, what's a good one? August. Okay, yeah. I'll just throw up a daily chart just now. So you probably know I've been trading a bit of gas and oil over the last few months, and there's a couple of reasons for that really. And I think I've mentioned a few of them here, but there's a thing in the in Europe called Nordstream 2. Let me just see if I can find something for you. Oh yeah, here you go. Let me drag this over here. So Nord Stream 2 is a pipeline that comes from Russia into Germany, and there's a whole load of interconnectors go from Germany out to the rest of Europe. On the side of this chart here, if you can, hopefully you can all see this, but there's other connectors come via the Ukraine. So in the early part of the summer, there's a whole load of stuff going on in the Ukraine, but essentially they were people were raising issues at the time that when this new pipeline opened, which is due to open in September, there was no gas storage facilities at the other end of this pipeline. So it was threatening the European supply of gas because essentially there's no buffer, and if Russia decide to pull the plug on it or push up prices, then they could do. Also, the fact that Russia and Germany have got two ex-KGB leaders in post at the time. You know, Angela Merkel, and she was Queen of the Stasi, and Merkel's King of the KGB. They got a long history of working together on slightly dubious things. So there's a lot of things about it being a political weapon, you know, all this kind of stuff. Essentially, what it was there's going to be some disruption to gas supply in Europe coming up towards the winter, and that has kind of knock-on effect because then they start importing liquid natural gas from either the Middle East or the United States, because you guys have loads of fracking and all that kind of stuff that goes on, and you supply an awful lot of liquid natural gas into Europe. So it looked as though it was setting up for a good trade, and you can see gas prices were kind of static, and they did start to climb this news was coming out around about April time, and it started coming up. So I did a little trade in here at one point, not particularly big one, but this was a slightly better trade. So I thought I would take you through the kind of thinking behind that and the macro chart. So the initial idea basically came from looking at gas as being something that was going to go up in price, and then the knock on of that is also the oil kind of drifts upwards on the back of that as well. So there'll be a little bit of increase in both, but gas seemed to be the one that would be the main contender. So kind of looking at it on kind of zoomed out basis, that 50 period moving average, which is the red line, seemed to be what it was kind of following up against. And when I trade gas and oil, I only use two real averages, which are the 10 and the 5 EMAs. So I was looking at this kind of pullback down to the 50 here, and this coincided with a couple of things. One, that the stochastic momentum then crossed up to the upside just after that as it flattened out, which is always a good sign. And the momentum you can see there on the PTOs will start to go up as well. So all three things are kind of lining up at this point. The volumes are relatively flat, but just starting to pick up. That's just that grey line is the volumes of the futures contracts just starting to pick up. So looking at this contract overall, you buy 10,000 British thermal units, which essentially equates to $10 per basis point per contract. I use a company called IG to do my futures trading. Reason I use that is they have a kind of concierge service as well that you can lodge with them what your various price points are overnight, and they have people manning the desk overnight that will get you out of the market if you want to. You pay a little bit additional for that, quarter percent on the contract size for that, but it's kind of price worth paying, I think, if something was to go badly wrong. So so that's kind of how I manage those contracts. So if I dip into this, because I tend to trade on the 30-minute chart, dive over here. So I'll go back to my notes and see if we're in the right spot. I don't know. In fact, I'll zoom this out. That might make more sense. So I bought 10 of these at 39.09, which is here, on the 25th of August. So 10 full contracts with a 40 basis point stop. So that means for each contract, there's $400 risk. 10 contracts, that's $4,000 is my risk on that. So I think at the time that'd be about 0.5% or something of my account putting on at risk there. So bought in there, and you can see that when you trade futures, I think as I mentioned last week, you have to bear in mind what previous sessions have done. So this is the London session here because this is in universal time. So Asian session kind of came down, London session pushed it up and brought it back in again, and then this is the New York session opens here at 30.30, and it kind of pushed up. So it took out that high, which is where I would get interested. I can zoom in a little bit more. So take out this high. So I'm now interested, and I placed an order on the break of that opening candle of the New York session for 10 contracts, which was taken at 39.09. So that's $3.909. Initial margin was 27,000, and my maintenance margin is 21,000. So that's that 48,000 comes out of your account and goes over to the broker and the exchange. I had a take profit order in at 80 basis points, so that's 2R essentially, for 4 contracts, which it did hit, but my order wasn't filled. So that would be up here somewhere. So missed on that, and then it came a fairly sharp pullback. I think I would be sweating a little bit there if I'm not mistaken. But that was the risk, and it came down, and it didn't quite hit that stop, and it bounced back up, and then at the close of play, it posted. The close held at a plus 10 for me, so I bought at 39.09. It's 39.19, so 10 basis points, so 100. So I got about, I don't know, $3,500 or something whacked into my account. Then the next day, the overnight session, Asian session and London session's fairly flat, and then had this big spike in the middle of the day, which still didn't go near my stop, and then my order, actually, my take profit order, then got filled, and I got a good bit of slippage on that, so slippage in my favour. So rather than 80 basis points, I got filled for 96 basis point profit. So that put $3,850 into my account, which essentially covered my risk. So I'm now on a risk-free trade. So I moved my stop to break even. And then it continued up that day, and the closing print was 515 basis points higher, which transferred about $30,000 into my account. So I'm trying to find where that would be. It was on the 26th. There it is. There's the final print there. Yep, 427, 424.7. So a lot of money flowing into the account, and that's now put back, most of the margin that I'd taken out as well. So my account was well topped up. So I could be starting to take other trades if I need be. Again, fairly flat overnight and through the London session, and then US session sparked up again. At this point, we were coming into the weekend, so I got a profit order filled. I don't think where I've marked it. Maybe not on here, but I got a profit order filled at 4336, which is somewhere in about here. Oh, there it is. It's hiding. Yeah, so I got a profit order filled at that point. So sold 3 contracts. So I've now only got 3 contracts left. So I got then 12.81k moved into my account. So we've now got 16,000 in profit from a 4,000 risk. So that's 4-hour trade, and I've still got 3 contracts running. The decision is then, are you going to hold over the weekend or not? In this case, I decided, I would hold over the weekend because I thought it was quite bullish for the commodity. So I moved my stop to the 10-period moving average, which is down here somewhere, and contacted my broker there to say if it hit the 10-period moving average on the daily, then I'm out of this trade to take me out. So I let them manage the trade for 2 more days until the 3rd of September, which would be, when is that? So essentially, I wasn't that fussed about this anymore. I was just letting it run, and my broker was managing this trailing stop at the 10 EMA. Then on the 3rd of September, I decided to close it out at 4,670. Oh, there it is. There's where I closed it out there at 4,670. So that was a 761 point basis move, which netted me another 22,830. So I ended up with a just shy of a 40k profit on a 4k risk. So it was a 10-to-1 trade, and that's a gas trade for you. Did all that make sense? Silence. Okay.
It makes sense to me, Stu.
Okay.
You may want to explain the basis points for people that maybe aren't familiar with it.
Okay. Yeah. So, well, if you look at it in a stock, a basis point is essentially what is the tick size, or the in fact, it's not even tick size. The futures contracts are defined in what the actual basis point is. So what is it you're buying? In this case, in gas, we buy 10,000 units. So 1 point is a thousandth of that. That's why you go down to 1/100th of a cent in terms of the pricing. So for every 1/100th of a cent that this moves up, your contract goes up $1. Does that make sense to people? It's often easier to think of these things rather than prices as just being numbers. So if you were to go from if I take this one here, $4.45 to $4.40, that's a 50 basis point move. So if you were trading 10 contracts, that'd be a $500 move, or a $5,000 move. That would be, because you're trading a full contract. So it's basically what that percentage is of the price that it takes to move your contract by $1. I hope that made some sense. Maybe not.
And I think that it's making a lot of sense, Stu. I think that if you had like if this were live or if everybody had their camera open, like you would see a lot of nodding heads. I think that it's like for me personally, like I'm digesting.
Okay. So I'm going to let me flip back to here. So I'll go to oil, and I'll maybe flip back to gas and show you a trade that within 2 days netted me over 100,000 in gas. But so if I go to oil again, oil's quite similar. So if we look at oil contracts, an oil contract's 1,000 barrels of oil essentially that you buy per contract. So you've got an initial, let's say with futures, you've got two things. So for each contract you buy, you've got an initial margin. That's margin that's lodged with the exchange. And you have maintenance margin, which is lodged with your broker, and that's how much your broker wants to do to cover daily fluctuations in the price of your oil, one contract of your oil contract, and that's kind of how the two of those kind of work. As I say, and if anybody missed last week's, the reason you get money in and out of your account at the end of every day is because it's marked to market at the daily fix of the price. And settlement on oil contracts is at 1800 Central Time. So it's just worth knowing when these things happen and that sort of stuff. So if I look at what one this is 23rd of September. Yeah, so oil. Something happened around here. Oh yeah, US reserve sales. So this I picked up on this, and they did the same again just the other day there, and look at what happened. And this will probably bounce back up. But the governments in each country hold certain reserve stocks of oil and stuff like that, and back in September, the oil had been sort of slowly creeping up, and the US Reserve sold, I think it was 20% or something of what they had at the time. And they sold that into the market, so that temporarily dropped it down, but it bounced really nicely off of the 50 period moving average. So kind of took note of that. There was a catalyst there for an oil move. The press was full of stuff like, it won't amount to much. It's a drop in the ocean, all that type of stuff, which it was. So I was just kind of watching for a move, because we'd seen sort of nice kind of trendy moves coming on in oil. And if I jump into this one, we'll go back in. Up here, here we are. So again, very similar to the last trade. You watch what's happened in the sessions beforehand, and then oil often takes its lead. If it's moving to the downside, it tends to take its lead from the Arab states. So that tends to be a late Asian, early European session, which is what we're kind of seeing here. Europe sold it off, a little bit on the basis that there was more supply coming to the market and so on. But then when New York opened here, then we had these two big pickups. So again, similar in that we've seen you see how I trade now, but these big upside bars, what you call a 3-line strike, has taken out at least 3 previous highs. You get a bar where it kind of pauses. I was a bit late into this trade. I should really have tried to get in a little bit earlier. But anyway, I put an order in and we got taken at 72.54. And we bought 10 contracts. Initial margins were $5,800 times Tesla's $58,000 and $44,000. So that's the price of getting into that trade. My stop was 40 basis points below. Now, basis point is a cent in this case. So essentially 40 cents below that is my stop on that red line. And this one kind of went a wee bit more to plan in that it kind of ticked up. And then that afternoon, my first target got taken out. So I sold 4 of my contracts for an 80 basis points profit there. So that gives me a free roll trade at that point. My stock gets moved to break even. So then it's just kind of managing this through the various things. So the closing print is 73.25, which is more or less where I sold out on that day. So there's some money came into my account of about 12,000, and then on the 24th I sold 3 contracts a bit further up at 140 basis points. And that gives me a bit more. That gives me another 4,500, and then we just managed it up really. I had a couple of days where money got taken out of my account on the closing print on the 24th. It was down from the 23rd, and then exited at a 280 basis point stop there at 75.33, and that gave me overall a 4-to-1 trade on that, and that. So that was kind of that. Now, if I had been a bit deeper pockets or whatever, I could have actually on that position there, if I wanted to hold through some of this stuff. There was some fairly big moves in oil came afterwards, so that could have turned into a really good trade. But I'm a bit more twitchy about that stuff. And the last one is I thought I would maybe take you through is over here. I'm going there. Yeah. So this was a trade that I kind of managed slightly differently. So I had again a 40 basis point stop. This was natural gas, but I bought 20 contracts this time. So my initial margins were 208,000, I think. Yep. So 208,000 on my margins. And I bought this one. If I can zoom right in. Oops. Can you hold me a wee sec, please? Well, sorry, folks. My wife is just back and shouting up the stairs at me. So
it's all
yeah,
good.
so this one we bought in here. This is a kind of London ledge, if we call it. So London came up very, very quiet, and it sets this little ledge, but there's been a big, massive move up. So I bought here, and then it kind of went nowhere all through the morning, and then all of a sudden it started to take off. Let me put that up to the big screen there. And then it started to take off. So I just kind of managed my stop up the way, and eventually, by the end of it, I managed to get 10 contracts off at this point, which was a 500 basis point move. So that was 12 to 1 on half my position size at that point. So I think that netted me a fair chunk of money, somewhere around about 45,000 US or something. So I then switched over to kind of managed service, and I was kind of managing this up and down, but we had a miscommunication, and my stop was still basically sitting here at break even as this came down. And when I logged in on the 22nd, I thought I'd been taken out of the trade, and I didn't realise I was actually still in it. And it wasn't until I got an alert through from Ben, my broker, who said, "You actually want us to manage this or not?" And then we had a conversation, and realised it was actually still had 10 positions running through this. So you can see where I just kind of started marking my stops up, basically, and I was just thought, right, I want to try and get back to here for the other half. And I managed that pretty much all the way up here, and then exited out at this point here for 533 basis points on that one. So, and that was and then became a 6-figure week for me. And at that point, I said, right, I'm just going to sit and not trade anything else for a little while. But I did, of course. I went and jumped in here, some more there. Managed to get 2 hour off of it, and then stopped out. But yeah, so that's my futures trading exploits.
It's one hell of a move. Congrats on the 6-figure week.
Yeah, I mean, you do get some nice profits out of futures for sure. Profits work slightly differently than stocks, in that they're not don't seem to be super linear. But yeah, you often think that you've had quite a nice move, and you're not seeing that much profit, but then when you actually sell it all in, and your margin all comes whacking back into your account and stuff, then you realise you've had a rather good trade. So, but most of them kind of go off for between. You either tend to lose them fairly quickly, so you lose your 1 hour, or you normally see somewhere between 4 and 10 hour profit on them. Well, that's what I tend to aim for. And that's you try to reduce your risk exposure all the time by, as you see, I sell on the way up and sell on the way out. But my main point is, if I've got a 40 basis point stop, which is normally what I try and aim for, somewhere between 40 and 100. If you get 2 hour out and sell essentially 2/3 of your contract, then you more or less got a free roll trade at that point.
I had a question on the prior trade that you showed. With how you got in. You were saying that you had gotten in a little bit late at first.
What was that? That would be
the general question about it, though.
Oh yeah, this one down here.
Yeah. So
in price from this one.
So when
I'll go back to that. That's trying to keep these two charts in sync. So nuisance. Right, there we go. Yeah, so I did get in late because I got in at high.
So you got in or where that green
Sorry, Mike, I
arrow
lost
was
you. What was the
pointing.
question?
So you got in where that green arrow was pointing. Where? So a couple of questions. And where would you have gotten in if you were getting in at the ideal time?
Ideal time would have been on the break of this bar. You see how I like to take entries. This one takes out 1, 2, 3 previous highs. In fact, takes out 4. So it's a really strong outside bar. Or well, it's not even the outside bar because of that, but really strong uptrend bar. And I like to see it taking out the high of that. So if that would ideal entry would have been 73.29.
73.29. Okay, and then
And I got in 72.54. So
oh, all right. So
bad, but
so then
still in vicinity, I suppose.
well, one of the things that I'm thinking about is when uh, I tend to struggle with getting in on a trade that seems to have left the station without me. In that example, I would have missed the whole thing because I would have just said oh, I missed it. I don't want to buy extended. So one of the things that you seem to be very good at is finding other ways in and adjusting your stops accordingly. So a note that I had written down here, and I'd like your thoughts on this. When price follows through sharply after I'm looking at that as a snapback rally or maybe you might call a pullback buy. I'm not sure, but you could get aggressive with the stop placement and use the daily lows plus short-term moving averages.
Yeah, and you see this happening in stocks all the time as well, that you get these big bars. So you get this pattern, and the one I look for, if I can find the brushy thing, brush. So you're looking for. It's not, oops, I'm getting caught out with this silly thing again now. So if I go to a clear bit of chart, you're looking for a bar that goes up, strong bar, and then pause, and then you're expecting to see that. So they don't always line up perfectly like this, but that's the sort of general pattern. You got the momentum, the pause, and momentum continues.
So what if you don't get the pause?
You generally well, if you don't, then you could just go above, take the high on that. But you'll find it, even if not on that time frame, probably on a smaller time frame.
Mm.
If you find a stock chart that's got something that looks similar to that, if I jump back into here, I'll go auto, yeah, there we are. If I looked at this and I would call that the pause anyway, because it's come up, paused a bit, and then taken off. But if you didn't get the pause, then ideally there. But if I look at that on a sorry, that's just kind of messed that whole thing up because I need to go back. But you get the point, I suppose. Even if you drop down a time frame, you'll probably see on that bar that you've got the big up bar and then a pause.
Yeah, no, that's good.
For the up bar.
That's good. Thank you. Question from Chet. Do you need a third-party data provider to trade futures, and is that what you use in TradingView?
You don't need a third-party provider because the Chicago Board of Exchange, if you subscribe to them, they give you them. NYSE, if you subscribe to that, they often give you that as well. Or your own broker. will also give you them. I tend to look at futures and manage the future positions on my broker charts and IG charts, but just because that's the live feed that you're getting, from them. Really need it. No. I think there's lots of providers, yeah. But if you're subscribed to any of those data sources, you should be able to see them. And I think what else we've got. And if we were looking at ES, that's coming out of CME and stuff. So yes, you do. It's not expensive though. It's like $4 or something a month. And if you trade any sort of size, then you probably get it for free anyway. So I'm like bundle these things in.
Chet, does that answer it?
I think.
All right, great.
Perfect.
All right, anything else?
All right, Mike, thank you. I'll close that down.
All right, perfect. Thanks, Stu.